All right. Welcome, everyone. Welcome. Thanks for being here. Happy day one of boot camp. I'm Stephanie, joined by Ian, part of our coaching team here. And this week, during boot camp week, we'll be helping you become a nitrogen power user, one center at a time. Today, starting with Risk Center. So if you're joining us live, you're in the right place. This is boot camp day one. And if you miss anything this week, or if you have to jump later today, early before we wrap up the session, don't forget recordings will be happening this week, and we will send out recordings at the end of the week.
That's right. Yep. Today we are kicking everything off with Risk Center. So, the foundation of everything you do in nitrogen, really. So, instead of showing you features, we're going to actually walk through a full story today. So, from initial prospect conversation all the way to that loyal client relationship.
Yeah, absolutely. And so by the end of this session, we really hope that you'll see exactly how to use nitrogen with or using nitrogen for attracting new prospects, building trust through powerful data with both prospects and clients, and delivering proposals and documentation that really convert clients over. It's all about moving confidently from prospect to proposal and beyond. So whether you're using it with clients or prospects, we'll show you a lot of great workflows today.
Yeah, absolutely. Before we get started, though, guys, I do want to cover some housekeeping items here. So, just like most of our session, all the lines are muted. But if you want to interact with us, we'd love to interact with you guys. So, drop us a question in that Q&A box. Leave us a comment inside of that, inside the chat there. Or if you're looking for some more resources, always head over into our resource section. If you're looking for specific step-by-step guidance on how to use each one of the features we covered today, definitely take a look at that resource section. We have some help articles in there, as well as a feature matrix to show you exactly what you have with your specific subscription level. Now, let's get started. Let's get into the session. We have a lot to cover today. Just really quickly, sort of a roadmap of all the things that we're going to be talking about. We're going to first talk about ways to engage with prospects. So turning a prospect into a conversation, documenting that risk tolerance with the risk questionnaire or the lead generation questionnaire, and then creating those clear proposals. We'll round out the session with some hidden gems, some pro tips there, and then, of course, our Q&A at the end. I don't want to delay us any further, Stephanie, so I'll let you get into the first section here, all about turning that prospect into a conversation.
Yeah, absolutely. So we're going to do a little bit of storytelling today. So kind of put your story caps on, and hopefully this will help you connect with how you can use it in your own practice. So meet Sarah today. She's a financial advisor working on growing her practice. And James, he's a prospect she met through a referral. He's working with an advisor currently, but he's uncertain whether his investments match up with his comfort with risk. So, what Sarah's going to do is she's going to use a couple of tools inside of Nitrogen to really launch that conversation with her prospect, with this lead. So, we're going to jump in product here. So what Sarah does to sort of start her journey is she goes up to her menu and settings, and she's going to send James a link to the questionnaire. So under the lead generation link back here in her settings, she can go into one of her links and simply use this hyperlink. And she can copy this and send this over to James. Now it is under your menu and settings. And if you need to refer back to, the steps it takes to get here, just jump into the Help Center. As a little sidebar, you can jump into the Help Center and search up lead generation for step-by-step instructions on how to get to where we are right now. But she comes into her lead generation tab, she copies her lead generation link, and then emails that out to James. Now, she could also have this same link pasted and put in her social media. She could have it in her email signature. So there's number of places where she can use this lead generation link and be able to bring in those leads for folks who are curious about working with her. So we have the lead generation questionnaire. We send that off to James, and then we can come back here into our profile, or Sarah can, to see his information once he's done completing that. Also in the Help Center, if you want a little walkthrough of the questions that are in the questionnaire, we have some great resources on that as well. But I'm going to search up James here, and we're going to go to his profile. So the great thing is whenever you send a questionnaire, you as the advisor receive an email back letting you know that someone has completed the questionnaire. Let's see, that's taken a minute. So we're going to go this way. There we go. So James here, he's marked as a lead because he completed Sarah's lead generation questionnaire. And Sarah can come here into the risk number tab to then see the results of his assessment and confirm those results. So we can learn a little bit about both our leads or prospects and our existing clients when we walk through the questionnaire. So the questionnaire includes things on financial goals, financial sentiment, how they feel about risk, whether they like to take risk or go with certainty, and notes. Clients and prospects can also leave you notes. So James here mentioned that he's looking to sell his business in the next 5 years, and he's a number of years away from retirement. So this gives us a lot of great information at a glance. Again, that's the questionnaire. So we'll be able to come in and confirm that result. And on our risk number scale of 1 to 99, with 1 being like cash and 99 being like high volatility stocks, we've identified that James is comfortable around a risk level 59. So you can imagine that as a speed limit sign. We use that analogy all the time. So we've identified James wants to be around a risk 59. Then Sarah can go into his portfolio and upload his statements or capture his existing accounts. So we've been able to do that here, but I'll show you a little behind the scenes. What Sarah would have been able to do is come into add an account or create a portfolio. And when we add a fund and stock account, just kind of a traditional account, we see a few different options here. Now, based on your current subscription, your options may differ a little bit, but that's totally okay. That's totally normal. So if you see this upload file capability with Nitrogen AI, this is our AI statement capture. So what Sarah did is she was able to get a statement from James ahead of their meeting. She uploaded it here, just the PDF as it was. The tool scanned it and identified all the holdings. Alternatively, you can always import spreadsheets. You can enter manually. Maybe you see this asset sync option in your account that lets you connect outside accounts as well. So that could be a backup. If you don't have the Nitrogen AI statement capture, you may be able to enter manually or use asset sync. So those are kind of behind the scenes, how you can go in and create these accounts. And so we have 2 accounts here. We've captured and analyzed James's risk for him. So he mentioned that he's feeling uncertain whether his current portfolio aligns with his comfort towards risk. And right away, Sarah can tell that his current portfolio is a little more aggressive than where he would prefer to be with risk. So it's going at sort of that risk speed of 68, and he wants to be around a 59. So right away, there's this misalignment. So when she meets with him, it's ready to go. That first exchange, that first meeting can be dynamic, and James can see Sarah as not just another advisor, but somebody who listens, who educates, who really knows her stuff, and can help quantify what comfort really means for him. and that's how she can win that first meeting. So Ian, anything else that you would add for like the risk number and portfolios, kind of introducing prospects or leads to this whole risk comfort concept?
No, I think that was great, and I think that this really just shows like all that pre-meeting process, right? So before we actually get James in the door or on Zoom, meets, whatever it might be, and we have that conversation with him, we have everything prepared here. So we have a better understanding, we have an understanding of where he wants to be in terms of risk. There's a little bit of misalignment here, so we can speak to that. And so now we have all of these tools in our belt. We're prepared. Sarah's prepared to have that meeting. So moving on into the next section here, really talking about having some discovery, but also guiding a meaningful risk conversation and guiding James through the meeting here. So when James comes into his first meeting, Sarah knows that this is really where the trust is built, right? Sarah starts asking James about his goals, his retirement plans, travel, maybe legacy plans, even, and then uses risk center to translate those goals into numbers here. So that's what we're trying to do. So really quickly, what I want to mention is Stephanie sort of mentioned this already. She showed inside the risk number tab, you can navigate there to review that risk questionnaire or that lead generation questionnaire after that prospect completes it. But this is actually a really great place to navigate back to when the prospect is in person meeting with you or via Zoom again, to review that with them. So you can come in here to that risk number tab and start the conversation here and just make sure that this is what they're comfortable with. So reviewing how they answered all these questions, what their financial goals are, if there's anything that they didn't include there, and anything about their financial status too, really that they might want to tell you that they might not have included, but really honing in on that 6 month comfort zone, because this is going to really come into play in just a moment here as we review the portfolio, James's portfolio with him. So over the next 6 months, between negative 12% and 18% on the top end there is what you said you're comfortable with. Is that still what you're comfortable with? So just reviewing these notes, making sure that they have an understanding of how they answered those questions and what exactly the results were here. So now we know James is comfortable. This is his risk number 59. We can then move into talking about his actual portfolio and mentioning that his portfolio is actually a little bit out of alignment with where he wants to be, based on what he told us in his risk questionnaire, right? So inside the portfolio here, a few things to note. Um, Really, the first thing I want to point out is the 95% historical range. So on the right hand side, we'll have a few analytics. Starting with that overall risk number here on the top, we have, and then just below that, that 95% historical range. This is a really good expectation setting metric because it tells you and it tells the client over the next 6 months, this is where your portfolio will fall 95% of the time, and that's completely normal. So the point here to get across is that your portfolio is actually shifted a little bit out of alignment compared to what you told me you're comfortable with, that 6 month range there. And what we want to try and do, what Sarah wants to try and do, is get you more into alignment here and move that 95% historical range just a bit down, especially on that downside, to make sure that you're comfortable, to make sure that you have a better understanding of where your portfolio is and removing that uncertainty, right? Because we don't want market volatility to hit and then James feels uncertain and capitulates and wants to sell, maybe out of fear, or whatever it might be. So really good thing to hone in on there is that 95% historical range. Another great way that you can set expectations or really sell the fact here that he's out of alignment, and the proposal that we'll get to in a moment is the best move for him is through stress tests. So inside the portfolio, again, on this right hand side, you'll see stress tests there. You can click into that. And the great thing about stress tests is, again, it sets expectations. It paints a picture of how this portfolio specifically will fare in certain market conditions if they were to occur again. So basically, these are those black swan events, that 5% of risk that we can't quantify, but we can still talk about, and we can show James, okay, if the 2008 bear market were to occur again and you were still invested with this portfolio, this is how it would fare, and this is how it would look benchmarked against something like the S&P 500, right? So, really great way to illustrate, okay, how are these events going to impact your overall portfolio? How are they going to impact your overall psychology or psyche as an investor. Really good conversations to have here and talk about um, just expectation setting and showing him really what we're trying to do here is get you in a better place, get you invested in a spot that is aligned with your own risk tolerance. So at this point, we've had this conversation with James. We've taken that conversation from those abstract markets and moved it into a more easy to understand illustration that personally impacts James, so he has a better understanding of his portfolio risk number, his probability of success here, and just overall using the data here to tell a story. So with that, we want to move into now talking about how you can generate and bring that plan to life with a proposal. So, Stephanie, I'll pass it over to you for that.
Yeah, absolutely. Thanks, Ian. So yeah, now it's time for Sarah to show her approach, how she could help James improve his outcomes, improve that comfort level with the risk that he's taking, so that when markets do get bumpy, he's not totally thrown for a loop. And so that's where the risk center proposal tools can turn that trust into action. So we'll come over here to create a proposal. And I'm just going to show us really quickly how we can go through and copy a model to create a proposal. Now, when you are creating proposed recommendations, you can copy their current portfolio and make some modifications there. Or you can come in and create sort of a blank slate, which is what we're going to do today. So I'm going to go into fund stocks and other. I'm just going to add an account initially. I'm going to choose this copy a model option. This is the most popular way that advisors typically add investments into uh, a proposal or recommendations. So we're going to come in and choose the taxable status, go into one of our models and pick something that's closer to James's risk tolerance here. So let's go with this model here. We're just gonna, for now, kind of put everything in this basket. Now he did have two accounts. We can always change that later on to be able to illustrate how we might invest his two accounts differently. But for just this illustration right now, we have the model that we dropped in just within a few clicks. And we have that risk number that's way better aligned with where James wants to be and that 95% historical range that's a lot more comfortable for him. For him, he wanted to be around, I believe it was a downside of about 12%. So we've got 11.5% here. But the great thing is with the 95% historical range, we're always going to highlight those real dollar values. So that's really powerful there to show them what this means in terms of actual dollars. So we've created a portfolio that's aligned with James' own risk tolerance. So now we can dig a little bit deeper. Let's say Sarah's meeting with James and she wants to show him a few other sort of stars or differences. Of course, we have the exact same stress test for our proposal. So we can show him in larger, more extreme market conditions, how by lowering his risk, maybe he wouldn't see as much downside and protection points like that. But maybe Sarah also wants to talk about, expenses or a risk reward trade-off, like how much reward, how much upside potential are we getting for the risk that we're taking? So we have things like heat maps and expenses. So just for this one model, the expense ratio is pretty low. If you had a proposal here with a bunch of individual holdings, you could see that. So I'm just going to drill into this model really quickly. And maybe Sarah wants to show him the expenses that are a part of this, or that risk reward heat map. So we have a few ways that she can dig in and kind of show James and create conversation points around what would be, most impactful and to illustrate that improvement by investing in her recommendation. So we've done all of that. We're going to zoom back out to his proposal. We have that here. We have the analytics that are now much more in line. And I don't think we really drilled down. We also have some really nice basic analytics on the right-hand side beyond just the historical range. You can talk with clients and prospects how you can get them in a better asset class range. Here we're looking at a little bit more like an 80-20, but we're still optimizing that upside. We've got GPA, dividends, annual range midpoint, and costs. So you can also be transparent with prospects and existing clients, what fees are involved, what expenses, etc. And for any taxable accounts, we also illustrate tax drag. So it's great to kind of pick out which talking points are most valuable for the individuals that you're meeting with. I definitely like to reassure folks you don't have to cover everything in nitrogen with every single client. It may differ a little bit. So if I go to our overview here, we've got a nice side by side immediately right here. Our current portfolio for James that we analyzed, Sarah's proposal, how it's much more aligned. So now maybe we want to create some documentation to kind of tie all of this together. And Sarah's going to create that maybe for her record or as a deliverable to give to James to wrap up their meeting. So we can come in and create a report with legacy reports. Maybe Sarah just wants to create a proposed portfolio report. So you can come in and select a proposal. She can pull that up, print a quick report. We also have reports builder. So if you see this option here, you can come in and create a customized report for James here. If you see Reports Builder in your own account, definitely come in and explore. We see advisors creating like templates and things like that. I'm just going to give you sort of a preview here, but you can customize it with elements on the left. You can come in to the center here and sort of preview what would be included in your report. Maybe Sarah just wants a nice, clean one-page deliverable, and she's going to compare the current portfolio with his proposal that she put together. So she generates that into a nice PDF document, and she has all of that documented for his proposal and ready to share with him and save for her own records. The great thing about reports as well is they're all date stamped. So while nitrogen in the platform is meant to be dynamic and change over time as markets change, reports are date stamped. You can sort of freeze a moment in time and document where a client was when you last connected. So this way, instead of telling James, I can do it better, Sarah can genuinely show him with a side-by-side visualization, both in his profile and in reports, that how she can help. And that difference is really impossible to ignore with the visuals that you can lay out using Risk Center. So yeah, Ian, anything that you would add before we go into our next section?
No, I think that was fantastic. But just to keep the ball rolling here, I'm actually gonna have us fast forward now. So kind of keeping in this same vein, following this customer journey, we've gone through from lead to prospect to actually building out their proposed portfolio here. And now let's fast forward. Let's say fast forward about 6 months here. James is now a client. Sarah has delivered that prospect or that proposal, and he's now happy as a client. So, but Sarah doesn't stop there. She continues to use nitrogen to engage and keep her clients retained pretty effortlessly. Now, how does she do that? The great way that you can do that inside nitrogen, the way that Sarah does it is through check-ins. Check-ins is a really great tool that you can get set up at the onboarding process or even after, but it enables you to have an automated checkpoint or check-in for clients that will go out on whatever cadence you decide. So whether that's monthly, quarterly, annually, it will go out and deliver a quick message to these clients saying, "Hey, just want to check in. Here's a few questions for you to answer." It's going to ask them, "How are you feeling about the markets and how are you feeling about your financial future?" They'll get that via email. Once they respond to that email, you'll get a notification and it will populate in this check-ins dashboard for you. So you can see here we have a few populated already. You're going to get an overall breakdown of your client sentiment, showing who's confident, who's fearful, and who's anxious, as well as the people that are happy. Like we like to see that, right? So, really cool way to see at a high level how your client, how your book of business is doing, and also let your clients know, hey, I'm still here for you. I want to maintain that touch point with you, make sure everything is going good. Um, and it helps your clients just maintain that level of confidence with the services that you're providing. So, a few things that I want to mention here. Like I said before, you can absolutely change that frequency, how often you send these out. But once you set it, you can forget it. It is automated after that. You can click up in the little settings cog here to change when it will be sent out, as well as how the responses will look for people. So, really cool thing I want to mention here, something that Sarah really excels at, is maintaining that touch point, but also having a way for people to kind of have a self-service way to reach out back to her. So depending on how they answer those check-ins, you can change these responses here, and these responses will show up to clients based on their response, right? So um, positive or negative. A lot of advisors, including Sarah, like to include like their Calendly link or their scheduler link inside these responses as a way for clients to book a meeting with them just in case there's something they need to talk about. So that's check-ins. Really great way to keep your finger on the pulse here, keep your thumb on the pulse, and maintain that contact with clients in between meetings, and really show them that you're working for them and you're working for their financial future and stability as well. So just wanted to call those few things out. We are getting towards the end of our session here. We've pretty much gone from prospect to proposal and beyond, but wanted to just quickly mention a few hidden gems. And primarily with Risk Center, I think the most important thing to call out is integrations. So if you haven't already gotten your integrations set up, we have dozens available for you. Everything from CRM integrations to custodians, data aggregators, and more. And especially really like to call this out because it's going to save you so much time when you're going and creating clients, getting their information into Nitrogen. If you have those assets under management, you'll be able to add them directly from that integration. So whether it's a CRM or a custodian, that data will flow into Nitrogen, and Nitrogen will automatically create that current portfolio for you. So you don't have to go in, do any manual entry or any of the other tools that we saw today. That process is already completed for you. So wanted to call that out. Absolutely. Take a look in our help center. If you're looking for a specific integration, you can click that help tab, search for the integration by name, and we will surface a help article on how you can access that integration setup. All right. Well, we have Q&A coming up here. So Stephanie, I will pass it over to you to get us some continued resources and move us into Q&A.
Yeah, absolutely. So, as we've seen today, risk isn't necessarily just about risk. It's also your growth engine. So, hopefully, it can be that tool that helps you create that repeatable, scalable process with both prospects and clients. Again, it's about helping you attract the right clients, deliver that tailored advice, and really nurture your client relationships. So as you're continuing to learn how to do all of those things, attract clients and nurture your client relationships, we have training resources galore. You can scan this QR code. You can jump into that help center we just pointed out in product. We've got quick video guides in the help center as well, and a support team available Monday through Friday. So we have lots of resources and lots of folks here to help. Before we jump into Q&A, we are going to tell you about some upcoming events. Our Fearless Investing Summit is happening in Denver in February. So we'd love to have you join us in person. Feel free to scan that code or go to nitrogenwealth.com to learn more information about that. And use the code Coaching VIP to get a discount as a thank you for joining us at Bootcamp this week. And then we're also going to launch a quick poll. So share your thoughts on how you enjoyed today's session, what you thought, what you liked, any feedback. We love to hear it. And then now we'll jump into questions. So any questions, be sure to drop them in the Q&A box at the bottom of Zoom. And we will jump into those now.